less common ones that harder to do typically. They can be done. Yeah, these are the juicy ones. So we've gone through put and call options, which is pretty juicy. And then we can move on to seller financing.
What's seller financing?
What is seller financing? I put this one in here to chat about because when people buy a business, they can use seller financing. And buying a business can be similar to buying property, where you decide to purchase the business for a certain amount. Say you buy the property or the business for $500,000, and you say, hey, like I've got no cash, this is worth $400,000. I'll buy it for $500,000 or maybe $450,000 or whatever it is, and then you the money that you earn through that investment, you pay out over time.
So using the seller,
the person
as the bank.
as the bank, yeah. Correct. Yeah, then you pay them back over time. It's pretty typical with the business. It can be done with the property, depending on the property type. It's probably more common with commercial if you find the right person to do it with,
or family,
yeah, or somebody that's got a good personal relationship and
happy to take the risk on.
Yeah, happy to take the risk on and be the bank basically.
Yeah, like everything.
And the interest, say the interest rates at the bank might be 6%, with you getting your own finance, but you can't get finance. So maybe you say, hey, how about I give you 8% if you finance the deal? And they're like, cool, like they don't need the cash straight away, and they might be the bank, and you pay them 8% instead of 6% from the regular bank, and at least you can finance the property through them.
Yeah, but they'll. I mean, if they don't ask these questions, that's obviously a win, but they should be looking into your financial situation. So be open to opening the book to your financial position, because they're taking a risk on you. And obviously, if they're open to seller financing, that's a fantastic result. So it's got to be a win-win scenario, like everything.
Yeah. And then the next one, we've got rent to own, which is kind of similar to seller financing, but it's without paying interest.
Yeah, yeah. So it's kind of,
it's like what you would call in buying a business an earn-out.
Well, it's like what the same name says name on the box.
Yeah,
which is you rent the property, you pay a slight premium, and you're essentially not only just paying the rent, but you're paying down, you're paying them extra money as the deposit, essentially, and then you get to that point where you've got enough in that deposit where you can go get a loan, finance it, and say, I've got X equity built up in this property. It's all contractual, so speak to your conveyancer solicitor around how to structure that. But for those who are listening to this, they're on the renting ladder and they want to get into property, it's an option, right? Like, all you can do is ask the owner of the property if they're open to it. And I don't know, I'm seeing, I get really good vibes out there in the world, especially Australia. Like, people, they take lower purchase prices of the properties because they want to sell their property to someone who is a good person who's going to look after their home. Like it's
so normal.
It's doable, but you just got better questions to ask.
I actually have a segment in some of my training that I do when teaching people to buy businesses, and it's called How to Become an Attractive Buyer. Because the more attractive you are as a purchaser, typically the less you can pay for the deal because you're attractive. You're an attractive buyer. And the person who's selling their business, it might be their baby, or it's their home, it might be their home that they put a lot of love into. They want that to continue on. For example, I'm getting out of Australia, and I've been selling some stuff, and I sold this awesome guitar the other day for a lot less than I wanted to sell it for, just because I knew it was going to a good home. And same with any asset, really. It's like, if you learn how to build relationships with the broker and also maybe the seller if you can, then you can get deals cheaper.
Broker being sales agent.
Sales agent, correct, yeah.
We've got to keep doing this, man. I'm sure people that listen to us are like, oh yeah, Jaryd says broker means sales agent in a way. But the same.
Same, yeah. So that's rent to own. And then we've got an interesting one that you threw out there.
Yeah, so definitely depends on the time, the place, and who you're dealing with. There's asset swaps. So classic, and this is probably more for like the house and land package sales agents who just want to get that that land sold essentially. So people, and I've seen people do very well out of this.
Yeah, so give us an example of
so asset swap. You have a car. Your car's worth 30 grand. You don't need the car. You need the house because you know that, hey, I'm at that stage. If I can use this car as my deposit, they'll take that as a deposit of $30,000. Then you get the land, you can do your build, and then you can hire a car in the interim because your asset of a house and land is going to appreciate more in value than a car. So it's definitely not for everyone.
And public transport until you can buy another car, or
it depends how desperate you are. Or you give them a car, 30 grand, go buy a $5 grand car.
Yeah, like 25k there to put towards something.
Or you don't have to give them the car directly, but sell the car down. But depends on where you're exactly at. If you're in that pressure cooker environment and the sales agents like, look, we'll take your car, go for it. Right?
Well, it's coming back.
Call me first, and I'll talk you through it.
Yeah, call. We'll chat to you about our coaching soon. But we're not advocating people to sell all of their things that they have.
No.
But when you start to put on your wealth creation hat and you start to think of somebody who does build wealth, then you're starting to think of how much ROI am I getting from this thing that I've got? And if I sold it, what's the opportunity cost of me holding onto it versus selling it and putting it into another asset like buying a piece of property? For example, there's people that have cars that are like 70 grand, right? And they could sell that car for 70 grand and put it towards a property that is maybe they sell it for 70 grand and then they put towards 60 grand towards a property deposit and buy a $10,000 car. And then they're putting that $60,000 into an asset that is an actual liability, because the car's a liability at the end of the day. It costs you rego, maintenance, insurance, petrol, all these things. It does give you some sort of ROI in terms of transport, maybe fun and fulfillment if you love the car. But
you love taking those Instagram photos of your keys, your Mercedes-Benz keys, or your steering wheel. See those ones? Like, I'm killing it. I got an Audi, and it's like, mate, that's what's wrong with the world. Sorry if I get on my little high horse, but the world's full of trickery. People are putting out there what isn't actual reality. Like, anyone can go and get a car loan and drive around like they're killing it, and then drive back to their parents' place and sleep there for the night, or go sleep in a rental. People are actually just getting so lost in materialistic things because there's billions of dollars spent on marketing every year to convince you to buy things you don't need. That is the key killer of wealth creation, getting you out of this hamster wheel.
Yeah, is thinking about what's your opportunity cost of holding these liabilities and these things that aren't earning you, or keeping you, earning you an income, and then are also keeping you in your current financial position. Maybe that's working a job.
Yeah. Put your big rocks in the jar, right?
Yeah.
That's what I say. But yeah, there's some key factors that we talked about. So like asset swap, that's probably the last one. Very unknown and rare. I'm sure there's other ones, but we wanted to sort of sprinkle that little thought process going in your journey, because if you see there how people reach out, they're really keen to get on the property ladder. They're just not sure how to go about it, and there's a couple of ways that you can leverage it. But if you do have any questions, or you have even alternative strategies that you've seen as successful, please reach out. We'd love to get you on the pod and to just talk about ways that we can help our community financially grow and prosper.
Yeah, thanks for listening, guys.
See you in the next one.